I wanted to answer the question that I sometimes get from, I would say, newer business owners. The question is, how can I use my P&L, my profit and loss report, to understand my business's financial health? What should I be looking for? Usually when I pull up any report in QuickBooks Online, one setting that I change from active, I change it to non-zero, because I don't really care to see any accounts that are showing a zero balance. And in order to get the percentage of income and percentage of expense, these two columns, I actually check them off just right here under the compare another period setting. This is the year to date for this sample event planning company. The company made a total of $53,978.55 so far this year. Looks like they're December year end. So year to date, that's what they've made. And as we can see, they sell some kind of products, because 35.29% of the income is coming from there, and then general sales, which is 19.92%, and then some income from services, possibly their direct offerings. Looks like this is the smallest amount at 6.67%, 3,600 of this total. So this could be an area of growth. There's an opportunity here to grow this if the company wanted to focus more on selling these services. I've been in the bookkeeping arena since 2013, and there's a few things here that really bug me. The first thing is there's no account numbers leading the account name here. This should be more specific as well. Going back to the income breakdown here, if the business owner wanted to grow the services side of the business, because it is currently making less money than the other services right now, we can help you review this and we'll suggest changes to your pricing and your marketing as well. I always see pricing as an extension of marketing. We'll definitely work with you on that to bring in more revenue if you want to boost this. We're always looking for ways to boost sales for our clients. This business owner might be wanting to look for ways to boost sales in other areas like products or even general sales, right? Let's have a quick look at the cost of goods sold. I'm just going down each section here. So the business spent $44,683.18. That's a pretty big chunk of the total income, 82.78%. These costs are really high. The company only made a gross profit of $9,295.37. That's 17.22% of the income. This tells me that the business is spending quite a lot to produce these services. This is why it's hurting their profits. Because of this big chunk of income being spent on producing the goods, the products, and the services, as a bookkeeper, I always like to break down these costs. I likely would be working very closely with the owner to uncover more details here, and I would work very closely with them to try to reduce the cost of goods sold. This can look like negotiation with some suppliers, finding more efficient ways to operate, maybe looking at software options as well. This is really going to help increase the profit and also help you keep more money in the business. What's next? Let's have a look at these operating expenses here. The company spent $17,734.67 on all of these expenses. That's about 32.86% of its total income. It looks like the biggest costs were rent, that's to be expected, and let's see, insurance, as well as electricity, gas, utilities. With the rent, typically that can be quite a large fixed expense. The business owner may want to negotiate or reduce this cost to improve its profitability. As a bookkeeper, I'm always trying to spot areas where the business is spending too much, possibly. With the rent being 20.84% of the income, I think the conversation needs to be had at least for a renegotiation. The business could move to a cheaper location, but again, this is a business owner call. This is just what I see from this year-to-date profit and loss. I would also check other expenses like these utilities here, electricity, gas, and also the insurance. You want to make sure that the business isn't overpaying. Always keep an eye on your rates. You may need to change the service provider. The last area that I'm going to look at right now is definitely the net loss. The business ended up losing $8,439.30. so far this year. That's about 15.63% of the total income. This is definitely a concern because this event planning company, they are spending more to run the business. They're spending more than what they're making, essentially. When I see this happen, my game plan is to create a financial plan for you to turn this loss around, turn this loss into a profit, essentially. So what that looks like is a detailed plan, a roadmap of what it looks like for you as the business owner. This involves cutting a lot of costs, looking at your cash flow, managing that better, and also planning ahead. You want your business to spend less than it earns, ideally, and for it to grow steadily as well. As a bookkeeper, I like to work with business owners so you can essentially get a better handle on your finances and you can make smarter decisions about cutting those costs and ultimately boosting the income. I want to see your business set up for sustainable growth. That's what this is all about. We're in this to, yes, make a difference and make a big impact out there, but also the business needs to be profitable. It needs to be growing sustainably as well. My job is to basically make sure that I provide more detail than this report, but also, even more importantly, actual strategies for improving this day by day and keeping you accountable, providing regular updates so we can track your progress really closely. It's very important to understand how your business is doing. Really, really important. So it does show how much money your business is making, the costs of providing your products or services, your cost of goods sold, and also the operational expenses. By looking at these numbers, you're going to see really quickly if you're making a profit or if you're losing money. You want to figure out which parts of your business are making the most money. This event planning company, they are losing money because of the high costs for billable expenses, and also things to watch are the fixed costs like rent. As your bookkeeper, I would work with you on increasing those profit margins. I really want to see these expenses cut down so we can see better financial health, essentially.